Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 17th. Michael Boutros here with you this morning. Carlos, Iman, Mark, Peter, Pete, Pooja, Tom, Ziad, great to see you guys all in the room. To start off this week, so on the menu today, we're seeing a nice little bounce in the dollar. It's heading up a little bit higher than I wanted it to be quite honest. So I'm kind of on pause here, scratching my head on some of these setups, but I'll show you some big picture stuff as well on the index that we're looking at. So DXY, as always, euro dollar from last night, dollar CAD, euro pound. Dollar CAD holding a pretty significant resistance level, both on a weekly and daily basis. We'll look at that closely. I don't have anything on it yet, but I'm looking for entries on that one. We'll go back to dollar Swiss, something that we were following very closely last week, as well as dollar yen and gold from the previous night's update. And I do want to take a quick look towards the end of the session at Bitcoin and Ethereum. So both of which reached into some major resistance levels that we were looking at last week. Both of them have seen a reaction off that resistance level. And we're basically trying to gauge the pullback. Now, if you're trying to play the short side, not really advisable at this point just yet. But certainly any long exposure on both of those trades at this point do look like they are a little bit at risk here to get deeper into the week. So, as always, if you didn't hear a pair that you've been looking at or you have a specific trade set up or any questions throughout the course of the session, as always, feel free to post your comments on the message board. All right, let's jump right in. So before we do, some data and overnight trade. You did get UK. I guess I should add British pound on here. I don't have it. You did get the CPI print in overnight trade. It came out at expectations. Core, headline was 3% year on year. Core came in right in line with expectations at 2.7% year on year. And you did see the pound actually, interestingly enough, move off. Now, doesn't really change the bigger picture for us. Near term, you are coming to some support, which we'll look at, but just be wary of that. Obviously, swing trades unchanged on that. Stop steady at 31.10. Hey, hello, Michael. Dollar yen, please. Also, Iman. Yes, I have it on the list. It's here. I gotcha. Okay, so let's jump right in. First things first. Here's what the index looked like early in the week, and I'm very iffy about this formation. I'll show you another one in a second that looks like it might be giving us a little bit better of a play. But again, the focus was on a possible pop higher here. We really wanted to see some near-term resistance levels come into play ahead of 94. You'd have the 2016 low day close, decent pivot in price, and you've set a really decent opening range right around straddling the monthly open. So on a well, let me start this. On a weekly basis, you guys have all seen this chart before. This is the resistance region we're looking at. So while I did want to see the index hold, 93.52, you could see a scenario where this weekly wick kind of pops right back into the 2016 low week close again, near 93.89 before coming off. But largely speaking, this is why we want to curb our appetite for long dollar exposure. If this gives out, you still have the possibility for a run back into that same parallel. Okay, that's seen perfect pivots, acceleration, pivot, acceleration. If we do break that, 93.89 level, you still have to contend with that. Now, it would give us a much larger stretch than we would like, but just keep the bigger picture in mind. Okay, it's really important here. Not to mention the monthly opening range is set. So if we were to pop through the highs, we'd be in a little bit of trouble here. That being said, daily chart looks like this. Again, there's that same level. 2016 is actually the low day close here, comes at 93.06. There's the monthly open. And again, you're setting the monthly opening range right below that resistance that we talked about at 94, which we hit 2 weeks ago. So even deeper in time frame, here's what the intraday chart looked like earlier in the week, and here's what it looks like now. The 240, we were looking at this pitchfork, and again, a break above 93.26. This was our near-term bearish invalidation level. I kind of wanted to see this really hold, start looking lower again, the dollar. You could see here that we did make it up there, but it looks like market does want to push through. So I'm weary again of trying to jump on short dollar exposure just yet. I do think you have the possibility here, since we've breached this to get into some of those upper parallels. Here's what the 120-minute looked like heading into the start of the week. Here's the Sunday open. We had noted that that lower parallel caught support pretty nice. We were looking again for resistance at these two levels. We paused here for a bit, popped over, and here we are trying to push through at 93.51 level. Now, here's what it looks like right now. If you dig into the 120-minute chart, I know this is not the cleanest chart, guys, but just bear with me. If you were to move this pitchfork to this low and take just the most recent highs in price, it could be in play. Lower parallel is not quite as clean, but it does catch the lows. You did see break and acceleration at the median line, a pause at the 50 line, and this would converge on the 618 retracement just higher, right around here. Okay, that's just under 93.70, 93.60. I'm sorry, 93.60, 93.70, 93.69, excuse me, to 93.72. This pocket right here. Now, my concern is that I start to fall into the mindset of just trying to catch a high, trying to catch a high, trying to catch a high. You don't want to do that. So with all due respect, we have to respect the upside at this point. Momentum is above 60. I'm going to leave this on for now, guys. So if you want to take a snapshot of this chart, as always, you can feel free to do that by clicking on the camera button on your GoToWebinar screen. This is kind of what I'm going to be looking at into the US Open. I do expect this to fuel higher, but I do want to see something up here. If we're going to continue to move lower on this. So a nice little stretch higher here. We were expecting it, but certainly getting higher than we anticipated as far as the speed of this advance. So cautiously, still at least the immediate focus is still higher towards that 93.69 level into the open. And again, I'm looking for some sort of exhaustion high somewhere in that region. Any questions on the index before we move off? So what does this mean for euro dollar? And that's the trade setup that we highlighted last night. So I'm going to take a quick segue to last night's update. Here's what it looked like. To start off the week, we were basically sitting on the monthly open, those purple dots there, as well as the 50 line of the advance. And again, this one's one that set up a very clean monthly opening range right above a basic support level, 236 retracement, 116.79, and those former lows again from July. I think that might have been August actually. But here's what the intraday chart looked like last night. Again, we're holding right above that former swing high, a break lower. You're looking at 117.49. This is kind of still the key support barrier where we rebounded last week. I don't know if we get quite all the way down there, but the risk is for the dump before we start to move higher. And again, this is in a broader uptrend still. So 120-minute chart looked like this, and the intraday now looks like this. Okay, so 117.49, I think you're going to get that any second here. This is 618 retracement. Look for a reaction there. This is the broader bullish invalidation level. And again, keeping in mind where we are in trend, that's down here. Why is that level so significant? In addition to it being the objective monthly opening range low, and again, the low that we made from August and the 236, within the next few days, you're also going to have the lower median line parallel for the broader structure we've been following off the yearly lows, and the 100-day moving average. Okay, it's going to sneak right up in there in the next couple of days. So that gives you, a little bit more of a target here for the downside if we do see continued move in euro. I'm mindful of trying to chase this any lower from here. Again, dollar index, that would leave room up into the 94 handle. But that's kind of my mindset right here. Still kind of iffy on the major euro and DXY cross. So I'm looking for further drop here, further advance in the dollar index, but looking for both of those to fizzle off pretty soon. Again, back to the intraday. Name of the game is nimble here. When markets start to move in this sideways lateral movement, especially as it's still respecting the levels, but kind of just wishy-washy on the breaks, good time to be a little bit more reserved on the leverage. Any questions on euro? Hopefully we get this thing charged up a little bit more. Okay, next up on tap is, that was one, two, is dollar CAD. Here's what the loonie looks like. So this one I do want to also take a look back to the weekly charts. Again, here's euro, by the way, just to kind of highlight where we've been, where we've come off of. But you guys saw that chart earlier. Here's dollar CAD. And this is why in dollar CAD, the main thing that we were talking about last night was, if this is legit, okay, this pivot break below the 2012 trend line, man, we should really, ideally, we should really see these highs hold. Basically where we are right here. Hey, good morning, D. Great to see you. So again, just simple is satisfactory. Let's say here's basic trendline support, break saw acceleration, testing the underside of it as resistance. So objectively, a break of support becomes resistance. Let's move right on off. Now, if we do break or charge a move beyond this, you do risk a larger recovery towards the 50 line. That would take you towards the 50% retracement at 129.27. Not our favorite move, but certainly we have to have the contingency, right? We need to know, well, if our idea is wrong that this thing's going to hold, where should we be looking? And your focus should automatically shift back towards that 29.27 region, the 50 line. So basically in time, that'll decay a little lower. So this is the larger picture of where we are again in dollar CAD as far as the weekly charts are concerned, and this is kind of on a weekly basis. We really do want to see the monthly opening range highs continue to provide some resistance. Intraday, or on the daily, let's get to that first, we look like this. So not quite as clear. Again, the one thing that I have been stressing to you guys are these purple slopes off the highs. This one not quite as clean on the rejection of resistance. But here we are. We offered some support there. And again, this one's not a main one I want to stress. It would leave room, again, for 2660 and then 2732, like we said. That also converges on the 100-day moving average if we were to move higher from here. But little subtleties in price, right? If I take a parallel off this, look at the highs that we just made this month. Boom. Boom. So in fact, today would be a third tag if this holds. And again, you don't want to extrapolate too much off this, right, guys? This is just kind of to give us a sense of whether we're working with the proper gradient, whether we're working with the proper slope. Certainly looks convincing to me, at least at initial glance. So again, reinforces the notion that we kind of really do need to hold these highs. If the breakdown is going to indeed follow through as we hope. Looking at the intraday chart, looks a little bit even cleaner. Okay, this is the formation that we had highlighted earlier in the week. Okay, here's dollar CAD last night. Again, there's the weekly chart. I provided you that last night just to give you a larger reference. Here's the daily chart. Again, we hadn't even made that third spike. We just did that today. So further, reinforcing, let's say, that gradient. And then the intraday chart really showed us coming basically into 25.52. And as I said, we want to keep that as our near-term bullish invalidation, or bearish invalidation rather. If that gives out, that short side play that we've been looking for, probably we're going to want to put, shelf that for a while. Long story short, guys, here we are. We're knocking on the door as resistance for dollar CAD. I like it higher. I like it, lower against that weekly high. If it turns and burns and rips right through, game over. Probably going to see 25.95 and that 26.24 level rather quick, okay? But just keep that in mind. Looking for a hold here in dollar CAD. Questions, comments, concerns on loonie? On all different time frames, weekly, daily, and intraday, all suggesting that we should be looking for something here. But at the end of the day, resistance is made to be broken. If it pops through, I do think that gives us a definitive, at least, upswing towards 26, 24. Okay, oops, there's a typo here, guys. I just noticed 25.98 and then 26.25, not 23.25. I hope you didn't you pick that up. So I will edit that once I get out. Dollar CAD. Okay, Looney. Dunsky, let's see if we can't hold below 125.50. Again, obviously a downside break of at least the European opening range here would be a nice start for a move lower. Targets on that, by the way, again, work with the median lines as we come in through time. Okay, so right now you're looking at like 25.10, 25.07 as initial target. Again, this is the monthly open at 24.85 and would certainly be the break in my mind that would suggest we're well on our way lower. That is number 3, dollar CAD. Any questions? Okay, last but not least, we haven't covered euro pound in almost a month, but I did want to highlight the basics of where we are. Not a trade that I'm really a big fan of getting too heavily on an intraday position. I do think that it offers plenty of opportunity. You often may have heard me call this one the grandpa trade, just because it's a very small ATR, but you're working with pound pips. So, it's a double-edged sword. Long story short, what I wanted to highlight last night is that we were coming obviously into a big support zone. The last time we came into this trend line, we did highlight support at 87.92. Now that was the outside, or not outside, that was the reversal day gap close that we made here in early January, mid-January rather. It was nice resistance, decent pivot, and it converged last month right on the lower parallel. So we actually started to look for an upside bias. So you got a couple of nice days of upswings on that. This break put us neutral. We didn't want to do anything here. I kind of lost focus in it. You were seeing divergence as you were making that break, price action making a lower low, the oscillator making a higher low, and then that exhaustion break to the upside kind of shifted the focus higher. So what happened last week? You made a perfect tag of the 50% retracement, 2016 high day close. Okay, big level, nice pivot in price. And you reverse lower, back below the 100-day, and look where yesterday's session found support, right? The 618 retracement of the advance, and again, it converges on that same slope. So I know we've compromised it before, but I've told you guys this, oftentimes leaving these slopes on, leaving these slopes on, a lot of time the markets will come back and retest those levels. So long story short, we were looking for a bounce here, but ultimately, I do want to see this formation break to the downside. I do think this is ultimately a trade I want to be on the short side of. So what does it look like on the intraday? Well, you had this near-term formation off the highs, which looked pretty clean to me yesterday, just on account of the confluence support rebound that we got here. We fizzled out there again in overnight trade and popped higher. Look where we're finding resistance right now. Interestingly enough, that level, okay, also represents and converges on this median line. If you look to the right, the 100-day moving average right there, right? It's the same exact level as the median line right now. So again, this is a gutsy trade, guys. I'm not going to ask, again, the confidence, I'd say is more of a 60% here from my end, but I'm looking for exhaustion. If this gives out, it's euro pound. I wouldn't be surprised if things rips right into the upper parallel. But I am looking for signs of near-term exhaustion here. The other thing I do want to be mindful of is today's close. Okay, if we close at these levels, it would constitute an outside day reversal of support, of confluence support. Or excuse me, this is a oops. Here's the daily. I'm sorry. It would constitute an outside day, not necessarily an outside day reversal, but off support. So, again, big old range here. And if we break to the top side, like I said, look for that 2016 high day close as an area of, again, possible near-term exhaustion. But this is a big region. A break below here, you're looking for the monthly open. That takes you all the way down to 88.12. And then 87.91 is, again, the 2017, what is that, January high close or high day close. So the levels are pretty clean. Basically, the focus is on this support. So for now, I'm looking for some exhaustion below this median line. If we plow through, again, 90s kind of where I'd start to look for possible reentry again on the short side. Questions on euro pound? It's not a pair we often talk about, but looked pretty interesting here. Okay. Swissy, number 5. Here's what Swissy looks like. I think you're still going to see 98, excuse me, on the clip for the upswing here. So to put things in perspective, again, so here's euro pound from last night. No change to those levels, by the way, guys. So we came right back into support, and then we popped right back into that resistance level. So no change to levels from last night. The previous update, here's what Swissy looked like. So last week, we talked about the major resistance turn off of this confluence region. It was a beautiful play. We loved the short side. We played it into 97.40, which is kind of where I bailed out. We bottomed just a little bit lower right at the parallel before kind of swinging higher. So bearish invalidation still remains at 98.13. Nothing's changed since last week. That level is still defined by over the next day or so, you're going to see the 200-day moving average drop into it as well. But you also have, just a basic pivot in price. Support, break, saw acceleration, almost tagged as resistance. Closed basis couldn't do anything. And basic trendline support off the yearly highs. Resistance off the yearly highs. So it's still the main level to break through. An interesting thing on dollar Swiss is the weekly charts have me a little bit cautious. And again, remember, trying to call a high is always going to be a tricky thing. Look at the weekly chart. An interesting level that comes up is above 98. It's 98.80. It's the 50% retracement of the yearly range, or this is actually the decline off the December high. But you also have the 52-week moving average right there, and the upper parallel of this formation. To be fair, we don't really have any type of validation that this formation is in play, right? Resistance, sure. If we are just following this basic slope, then actually it still leaves room for an upside. What you're looking at in the daily chart is this slope, and that's been holding so far. But I just wanted to highlight that if we were to pop through, it's not just, ripperoo, let's go into fresh new highs. You still have to contend with 98.80. So if you hear a little uncertainty in my voice, that's kind of where I am now. Is this thing done, or do we have a little bit more upside to go? The intraday chart highlights a little bit more of a room to the upside, at least in the near term, to 98. Okay, that basic trendline resistance off the yearly highs that we just looked at last week's opening range high for the week before we broke lower was right there, and again converges right around 98.07. 200-day moving average just a little bit higher at 98.22. That's this right here. So still, the basic beat right now is look for resistance here and a reaction. If that breaks, nice clear run up into that 50% retrace. And again, on the weekly chart, that's what comes up as a little bit more of a critical resistance region. So no plays here for me. If we get some sort of near-term exhaustion high at 98, I'd still play it just like I did over here. Super nimble. And the first tag of support, we took off a quarter. On the last drop, we kind of just washed out of the rest of the position at 97.40. But you get the picture. That's how I look to play this on a secondary approach. End of day, 98.21 is going to be our near-term bearish inval. Questions on Swissy? Kind of matches overall broader picture with what we're looking at in the index. If in fact 93.50 is given out and we're looking for that 94 level, that's where I would look for some exhaustion on some of these dollar upswings on the crosses that we've been following today. But on whole, all of these trades still remain within the monthly opening range, and it's the 17th of the month. So a late break of the monthly opening range will typically, again, give you a nice decent run once we clear these ranges. Swissy going once, going twice. Sold to nobody just yet, but we'll hopefully get a position soon. Iman, here's dollar yen for you. Another trade that we have been following. Here is dollar yen from earlier in the week. The focus was lower last week. Once we closed below, or once we broke the initial trade, we got back in. Once we broke below the median line here, not 112.32, 112 basically, 111.99 being the first targets on the downside. We opened the week below that, and we cited, look, even if we get up into 112.32, you kind of want to be mindful of that resistance, and it might be an area of interest for possible re-entry on the short side for a move lower into the lower parallels. Well, the time decay on this trade, guys, has really shifted the focus away from 111, to be quite honest with you, because right now the lower parallel comes in well ahead of that region. So here's what dollar yen looks like on the intraday. The upswing is obviously pushing through. This is the 120-minute chart, that 112.32 level now, which is why, again, I haven't been had any guts to try to push on this trade. You might have gotten tricked out in an overnight trade. There was actually a trigger I was looking at right before I went to bed on this. I was very tempted to take it, but I didn't. And obviously, it's a good thing I didn't. But here's the top side push again. I was very, what's the word I wanted to use? I was very hesitant to try to take it because this is kind of like a break of the initial weekly opening range. Here's your weekly push high. You test the low twice. Once we broke it, look what happened in near-term price. I like that you had divergence here, which is why I was looking for the short, and you even had some nice momentum. A trigger break here actually did shift it, but you were fighting an uptrend in the dollar across all the pairs, so it just didn't feel right. You probably could have even gotten away with a quick scalp of 20 pips to the downside, 22 pips to the downside. But at the end of the day, this is kind of making me a little bit more hesitant to do anything on this. Obviously, I'm not going to jump into a long and try to chase this from here. So the broader focus for me is, are we going to find monthly open resistance? And that's basically right here into 112. What's the actual open? 112.64. This was the open of a weekly here, so let me change this to 112.64. Okay, so that's your monthly open. So that's where you would expect to find resistance on a trade like this if it's still heading lower. All right, and if you're wondering again where this base came from, Mike, there's no necessary parallel there. You're right. It was just a 200-day moving average, literally. It's kind of just holding support. And I'm not a big moving average guy, but excuse me, a lot of times they will offer clear pivots from price, both on a break when we see the acceleration, and both on a support sometimes on the reversals. Long story short, looking for initial resistance, see a reaction near the monthly open. If that holds and we get a decent trigger, it's the abomination. Be careful. It might be a decent play, but if it breaks through, I really don't have much on tap until you get to the monthly opening range highs. Now, if you tack on a quick retracement, you might get some interesting levels, but nothing I would actually try to fight against. These would be more of a target on the upside if you're in any long exposure near 112.76. But like I said, if this maxes through, I think there's plenty of upside. I'm looking for some exhaustion here near the monthly opening. So better stay flat in the meantime and not jump in short. Eman for dollar yen, yeah, I would say that's a prudent move. Yeah, I'm with you. I want to, I was looking at that short last night and I was literally hovering over the trigger. I don't know what kept me out. I don't know if I got distracted. I can't remember. But yeah, I don't want to fight the dollar, man, unless I see the broader shift happening. It just looks like the dollar is getting a little bit more of a lift, a little bit more of a boost here in the near term. Remember, Friday bottomed out at a big spot, right? Both on the index and a lot of the dollar crosses. Okay, Friday's play on the NFP was pretty clear, or excuse me, on NFP, on CPI, right? CPI numbers were a little bit soft across the board, but then you came and you saw also the Michigan confidence surveys, guys. Those hit highs. I think, don't quote me, but I think it's the highest levels we've seen on confidence since 2004. Might be like a decade and a half. So, I'm not surprised to see the dollar. I didn't really want to see it rip through 93.50. Like I said, this was my bearish invalidation. So I think playing the long side for the dollar for me was appealing into here. But now, now I don't want to chase it. So if you're not already long, man, wait for a broader turn. If dollar index maxes here, you start to see a little bit more conviction of at least justification for trying to fade a move into the monthly open for dollar yen. But I call it the abomination for a reason, my dear. It's a very, very wicked trade. Uh, over my years, hasn't necessarily been my favorite pair. Hey, man, does that help? I wish I had more conviction on you for that one. Um, yeah, you're welcome. You're welcome. And when it comes back into focus and when we get a little bit more clarity on near-term price action, I'll definitely bring it to your attention. I'll be all over it. But I'm very respectful of dollar yen. I've gotten stung too many times on this pair over the years. Okay. That's number 6. Number 7, an interestingly clean trade, is gold. And here's what gold looked like earlier in the week. So we started off the week citing, all right, look, you broke channel resistance. That shifted our focus to the upside. In fact, we put out a report on this over on SB early in the month, suggesting 1275, bullish invalidation, excuse me. As long as we stay above that region, look to buy pullbacks. The open of this week on Sunday, this was the chart that I put out highlighting that we were at near-term resistance. And, simple is clean, guys. We're basically in very, very simple setups, and these have been my favorite. There's no lateral level of Fibonacci resistance per se, but, basic trend line resistance, the parallel, support, the break saw acceleration, was a little resistance for a while. The break saw acceleration, tested it as support, tested it as support. It gives us conviction to look at this slope. Now this extrapolated trend line here, obviously this parallel is a sliding parallel, just mimicking the same slope, highlights bullish invalidation near term. We brought that up yesterday to the monthly open, also long-term 50% fib, and that gives you 1280 into 1281. Okay. Noting the momentum signature starting to hold below 60. And again, this is not really clean divergence when you're using points that are so far apart here. But obviously the momentum signature looking a little tired. So inherently we said, look, the broader picture still remains bullish, but right here you want to be booking profits. You want to be looking for possible exhaustion and a pullback lower. Here's what it looks like now. The pullback, obviously, like I said, a little bit faster than I thought was gonna materialize, but nonetheless, levels have been just on point, on point. Again, if you're not on the short side, don't do anything here. If you are short, I want to start to look to clean up that book a little bit as we get into 1280. Don't wait till necessarily 1279. Okay, 1281 is the upper part of that zone, 50% fib. In fact, you also have these former swing highs, which is basically a little bit higher at 1282, but you get the picture. Initial area, you'd start to look for some support in the dollar index. This is going to be my near-term bullish invalidation. If we do get a break below it, I'm kind of neutral. Okay, do keep in mind, the monthly open is backed closely by the 100-day moving average, and that's why I don't want to get too, antsy if we break lower. You only have a little bit of room here to 1274, which would be, initial area of support. Also, just above that, the outside. The reversal day close comes in right here at 1275 as well. Okay, so you have that nice confluence region, and that's with the downside break. So for me, game plan, looking for exhaustion here. If it breaks below, I'm neutral. A move below here kind of opens up the floodgates, I think, in such a scenario for gold. All right, immediate focus into the open of U.S. trade. Let's see if we can't get that stab lower into 1279, 1280. Look for a reaction there in gold. Questions on bullion, or what that thing is doing. Some nice moves in the metals, generally speaking. Again, here's the intraday, a little bit closer of a look at the 120, even the 30, just showing real clean price action. That's near-term resistance. Key support still in this zone. Okay, and that is gold for the day. Looking for support just lower. Okay, I'm going to take a quick segue into, well, let me just finish up the dollar crosses first. Let me just do sterling, and then we'll jump into the crypto block real quick. So here's British pound. Obviously, We're basically at break even on the swing trade here after having that run up. But here's what pound looks like now, if I can find it. Pound, 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 pound. There it is. Okay. So the daily chart, well, I'm going to even take back even further. The weekly chart, which is kind of just a highlight of why I'm not really freaking out just yet. The major area of support, that we've been looking at on this weekly chart for a while was basically exactly where we bottomed last week. And it's this region right here. This is the previous yearly high week reversal close. Just call it the July high week reversal. It converged on that median line, or that basic trend line resistance, off the yearly high. So once that broke, cool. Up into the upper parallels, a sliding parallel off these highs caught the high. The pullback, I wanted to find support along here, this consolidation break. But at the end of the day, our bullish invalidation was here. And this is where we rebounded. Now, I don't want this pullback to get any lower beyond this region again. I don't even want to see it back at 130.36, but that is still the bullish invalidation level. If this does break out or break below this on a broader scheme of things, it kind of falls apart for the pound idea. But that being said, this is still our bullish invalidation. As long as we stay above that, the broader trade looks pretty constructive still. Take it back to the daily chart. There's really not much to say. Continues to highlight that 130.20 level. It's also a confluence 618, 100-day moving average. Still highlighting that same region. And now it's also the monthly opening range low. So, Mike, that doesn't really help us on the near term. What does this mean right now? Again, if you're holding the swing trades, don't alter that. That is what it is. As far as the intraday, looking for fresh positioning on this, it's another one where I can't really advocate anything, guys. Remember, I hate cliches, but being flat is a position. And if you don't have the conviction behind it, we can't do anything. I was going to highlight this chart yesterday. I didn't want to just because I thought it was going to be a little too messy. I added this basic trendline support off just the monthly low to kind of see what that does with the 50. We're there now. I didn't expect to even see it, but we're there now. So look for some support right here, essentially heading into the U.S. Open. Again, you have that parallel there, which has been a decent pivot, break, saw acceleration. We kind of sailed through it on both ends here. But that gives you 3180 into 3170 near-term support. Obviously, our stops at 3110, but if we crash through the 618, I think this thing is just gonna fall apart. Could go all the way back into 3020 again. Not my favorite scenario, but heading to the U.S. Open, basically looking for some signs of support right here in pound. Questions, comments, remarks on sterling. Cable looking quite interesting here. I want to see this downside start to cap off. Okay, moving into the crypto block real quick. Here's what the talk of the town has been on these cryptos, which saw some really nice breakouts last week. Here's Bitcoin to start things off. Basic slope sometimes is all you need. Here's a very, very clean example of the parallel. Messy on the upsides. The pivots saw really nice moves along the median line and the 50 line, but again, after something like this, you might tend to think to yourself, well, we should probably just scratch this slope, Mike, right? It's gotten so many breaks of resistance. Take a parallel off that same high. Look where we maxed out basically this month, the start of this month. So could get a pullback from here. I did find a new measured move here at the 100% extension from the advance off. Basically that July low. It gives you 61.21 on a top side breach. I don't think you get that right here. In fact, for me, I'm looking for today's close with great interest. We've already kind of broken the initial weekly opening range and we pulled right back within, but momentum's sitting right on that 70 line. And a break below 70, like we always say, while it's above 70, that's the sharpest part of the move. The market's rallying the entire time. A break below 70 would be sort of your initial target or your initial signal, let's call it. for a near-term correction or pullback in price. And if we do make that with a close below the weekly opening range lows, I think at that point you start to look for the pullback play. So to clean this up a bit with the levels, don't need this retracement anymore. Null and void. This retracement, null and void. Oops, let me bring that back and just take this to the highs. Okay, this is gonna look a little messy. Let me clean this up a little bit. Let's do this. This zone is no longer required. This is still going to be the previous high record day reversal close. So I am going to keep that as a level of focus, but possible targets on a pullback are basically right here. And that might seem like a big move, guys, but this thing, it's a very emotional trade, I feel. It's all speculation. Again, there's whatever anyone says here, there's no fundamentals behind this per se. So the study price action, in my humble opinion, on something like this, especially something so speculative as this, is all we need to really focus on. This could be a near-term consolidation pattern. Could be a near-term consolidation pattern before we resolve to the upside. I don't know. At the end of the day, this is kind of the initial major support I'd be looking at. It's still all the way down at 51.68. Intraday. So watch that support and watch where we close today. That would be the initial area to start to look for a base of some sort if we're still going to hold this uptrend. Near term, here's what it looks like. So I don't have another consolidation point per se to look at. The resistance line here. I'll just add this. I don't want to mess up. I don't want to make the chart too messy, but you can see perfect consolidation there. One could argue for using this low. You know what I mean? To look at something like that, could argue that that is the formation you want to look at. But again, even within the confines of the advance that we were looking at, the top side break of an ascending formation saw the sharpest part of the rally. It found support at that parallel, and here we are again, knocking the door on that parallel. So long story short, looking to see if we don't get that pullback near term in Ethereum. You have no business getting in the long side here, guys, not yet. Again, my humble opinion. At least from a trade standpoint. Investment and something like that, sure, do that's a whole different ball game. But if you're looking at this from a trader standpoint, you're at the highs. It's been an emotional run up. Unless you get some sort of decent correction, that ship has sailed. We kind of need to wait for a reentry. It depends, Mark, what broker you're looking at, man. I really don't have enough background information to give you what various brokers are. If you're trading offshore, IG actually has CFDs on it. Pretty competitive, but I don't know what their spreads are posting on that front. Again, that's not available for U.S. clients right now. And the ATR in this thing, oof, I mean, you could look it up, but I won't think it would do you any good because a quarter of the ATR is not kind of the type of play you'd want to make on this. This is a one-day ATR. I'm at $138, $140 on a daily basis. It's a big ATR. Yeah, it's a mover for sure. I mean, guys, just look within the context of what we did last week. This is huge. Massive, massive rally up. Right? This is a move from 4,800 into 5,800. Okay, so literally almost 100 pips, 1,000 pips to the upside. So focus more on the levels. This is not the one I would recommend doing a quarter of the ATR, which is typically what I look at on the intraday basis. Really, really wide range ATR. So just focus on the levels. Questions on Bitcoin. Mark, does that help? On the other side of the trade, the Ethereum levels, those actually look a little cleaner. And guess what? We left one range, which we've been looking at for weeks and weeks. we just jumped into another one. We talked about this, setting up a very, very clean monthly opening range just below the the 618 extension of the advance. We highlighted that just higher was the 618 retracement of the decline, and it was 312 and 320 were levels that we were looking at. Once we plowed through monthly opening range high, you look for a late month high. Is that it? I still think you probably have some more juice. You're basically looking for the pullback to find support ahead of 312. And in fact, if you look at this from the near-term charts, 312 also comes up as an interesting level with basic slope support. Support, third touch, didn't even get there. That level converges on the former highs, that 618 extension, and now it's also a basic 236 retracement of the advance. That gives you 14 to 312 for near-term support on Ethereum. Okay, basically that's your constructive zone. That's your bullish invalidation level. So price would remain constructive while above this. The major resistance zone that you still need to clear that we haven't been able to do is 315 to 354. We haven't even scratched the actual extension. We did hit 350, but we didn't get quite into. We had 349.50, excuse me. So we didn't quite get into that, but that's sort of the zone that we would need to clear. And then the high day close, the record high day close is 385. Remember, Bitcoin has already surged and ripped through its record high day close. Okay? This thing has even yet to try to make that move. So I do still think there's some catch-up play here for Ethereum down the road. Any questions on this setup? Hey, Mark, you're more than welcome. And that is Ethereum. 9 and 10. Okay. Any other questions? Trade setups you guys want to review? That's kind of all I had for today. Things are simmering down a bit, and again, some of these sideways lateral movements, guys, they will clear out, and I think we will get a little bit more of a surge in volatility as we head towards the close of the month. As it stands right now, if you're looking for fresh exposure, remember the dollar play idea, okay? We're looking to see where that index finds resistance, hopefully a little bit higher up near the 94 level, but largely speaking, you don't want to start chasing any of those moves just yet. Okay, if there's no other questions at this point, we'll go ahead and wrap things up. I will see you guys tomorrow morning, 8:30 for another intraday strategy webinar. Keep in mind, as far as the economic data is concerned, for the Aussie, which we didn't talk about today, just take a quick look. That thing I've been eyeing all week. I don't really know what to do here, and I kind of want to see if this is a congestion zone. We'll offer one last pop higher. At the end of the day, this is kind of your bullish invalidation level for the near-term upslope. It's still going to be that 78 handle, essentially. So my point being is you do have some event risk on, you got the RBA minutes last night. Obviously, you have Aussie employment later this week as well. China GDP should also be a player that could shift this pair, and dollar yen, obviously. So keep in mind we still have a lot of event risk on tap later this week and a whole lot of Fed speakers. So keep your eyes peeled for some of those comments coming through on the wires. All right, guys, we'll see you all tomorrow. Have a great day trading. Cheers.